Index funds might seem like just another investment option, but they are far more than that. They offer a gateway to the financial markets that is unmatched in its accessibility and effectiveness. For the uninitiated, an index fund is a type of mutual fund or exchange-traded fund, ETF, with a portfolio constructed to match or track the components of a financial market index. Their simplicity lies in their passive management. Instead of attempting to outperform the market, index funds aim to mirror the market's performance. This approach has proven not only less stressful, but also less costly, making it an attractive option for both rookie and seasoned investors. At its core, an index fund is a type of investment that aims to replicate the movements of an index of a specific financial market. By mirroring an index, these funds offer broad market exposure, low operating expenses, and low portfolio turnover. These funds adhere to a passive investment strategy. They are designed to keep pace with market indexes, which historically have shown to grow steadily over time. This makes them an ideal choice for long-term investment strategies. The key benefits include lower fees compared to actively managed funds, inherent diversification, and reduced risk of human error in stock selection. Index funds are not just an investment, they are a strategic tool for building wealth. Their potential for long-term growth is substantial, thanks to the power of market returns and compounding interest. Over decades, even small investments in index funds can grow into significant sums, a concept known as the miracle of compounding. In comparison to actively managed funds, index funds typically perform better over long periods. This is due to their lower fee structure and lower turnover rates, which minimize costs and maximize returns. By investing regularly and starting early, individuals can leverage these advantages to build a robust financial future with less effort than is required in more active investment strategies. Entering the world of index funds is straightforward. The first step is to determine your financial goals and risk tolerance, which will guide your choice of funds. Next, investors can choose from a variety of platforms, including online brokers, robo-advisors, and traditional brokerage firms to make their investments. It's essential to know the different types of index funds available, such as those that track the S&P 500, the total stock market, or international indices. Each type offers exposure to different sectors and geographic areas, providing opportunities for diversification. Starting with a clear plan and a basic understanding of the options can dramatically improve the chances of investment success. Diversification is a cornerstone of investing in index funds. By spreading investments across various market sectors and geographic areas, index funds naturally reduce the risk that comes from exposure to any single economic event or market downturn. This strategy is crucial in managing potential losses and achieving more stable returns over time. For investors, the built-in diversification of most index funds makes them an appealing option for securing their portfolios against volatility. It's a simple yet effective risk management tool that supports steady growth in a wide range of market conditions. The real power of investing in index funds lies in the combination of time and consistent investment. The longer the investment horizon, the greater the potential for wealth accumulation. This is due to the compounding of returns, where the earnings on an investment begin to generate their own earnings. Consistent contributions, regardless of market conditions, enforce a discipline that can significantly enhance the growth of investment portfolios. Regular investing helps in averaging the purchase cost and mitigating the impact of market volatility, a strategy known as dollar cost averaging. While index funds are generally less risky than many other investment types, they are not without their challenges. Market risk is an inherent part of investing in stocks, and index funds, which track a market index, are susceptible to the same ups and downs as the market itself. Investors must understand their own risk tolerance and be prepared for periods of short-term volatility. An effective strategy often includes maintaining a long-term perspective and avoiding the common pitfall of making impulsive decisions based on short-term market movements. Myth-busting index funds. Myths debunked. There are several misconceptions surrounding index funds that can deter potential investors. Some believe that index funds are only for beginner investors or that they don't offer substantial returns. Others might think that all index funds are the same. These myths are baseless and can be debunked with proper knowledge and understanding. Index funds are used by investors of all levels, including some of the world's most sophisticated institutions. They offer a proven track record of competitive returns, and there is a diverse range of index funds available, each designed to meet different investment objectives and risk tolerances. Real-life success stories. Many investors have achieved financial success through index fund investing. From individuals saving for retirement to large institutions managing billions, the stories of success are both motivational and affirming. These stories not only illustrate the potential of index funds, but also highlight the diverse strategies and personal goals that can be achieved through this type of investment. The future of index funds looks promising. As technology continues to advance, we are likely to see more innovations in how index funds are managed and accessed. Moreover, the growing awareness of the benefits of passive investing and the shift towards more cost-effective investment solutions suggests that the popularity and use of index funds will only increase. To maximize the benefits of index fund investing, it's crucial to continuously assess and adjust your investment strategy. This might involve rebalancing your portfolio to maintain your desired asset allocation, investing in different types of index funds to exploit various market opportunities, or combining index funds with other investment forms to achieve specific financial goals. A financial expert can provide deeper insights into the current market trends and how they affect index fund investing. This understanding can help investors make more informed decisions and better prepare for future market conditions. This section addresses some of the most common queries newcomers have about index funds. From basic questions about eligibility and costs to more complex inquiries concerning strategic use, this FAQ serves as a valuable resource for anyone looking to get started or to deepen their understanding of index fund investing. Index funds are more than just a passive investment option. They are a strategic tool for long-term wealth building. Their simplicity, coupled with the potential for substantial returns, makes them an excellent choice for a wide range of investors. By debunking myths, understanding the risks, and applying a disciplined investment approach, anyone can utilize index funds to potentially secure their financial future. Investing in index funds has proven to be a reliable and worthwhile strategy for countless investors looking to build and sustain wealth over time. As we navigate the evolving financial landscapes, the principles of simplicity, diversification, and consistent investment that underpin index fund strategies remain as relevant as ever. Encouraging a disciplined approach and a long-term perspective can help demystify the process and make the journey towards financial independence more accessible and less intimidating for everyone. Whether you're just starting out or looking to refine your investment portfolio, the world of index funds offers a promising path to achieving your financial goals. Remember, while index funds simplify the investment process, they do not eliminate the need for diligence and ongoing education. Always consider your personal financial situation or consult with a financial advisor to tailor your investment strategy to your specific needs and circumstances.